You've probably heard of Tom Lee. He's one of those analysts on Wall Street who isn't afraid to make some really bold calls. Well, today we're going to break down his latest outlook, everything from his top stock picks to one specific asset he thinks could literally multiply by 20 times. Okay, let's just get right into it. So let's just put it right out there. 20 times. That's the number at the heart of this whole thing. Lee has put a spotlight on a single investment that he believes has the potential for a 20x return. The big question, of course, is what is it? And how on earth could that even happen?
And boom, there it is. We're talking about Ethereum. Lee's not just throwing out a number, he's got a specific calculation. He says if Ethereum just gets back to a certain value compared to Bitcoin, its price could rocket to an absolutely astonishing $62,000. I mean, that is a massive leap from where we are today. So, what's the logic here?
Well, it all comes down to this big idea he calls the future of finance thesis. And you gotta understand, this isn't just about a coin's price going up. No. This is about a fundamental, ground-up shift in how our entire financial system is gonna work. The engine driving this entire prediction is one key concept: tokenization. Just think about it. Imagine taking a share of a stock, or a bond, or even a piece of your house, and turning it into a digital token. A token that you can trade instantly, 24/7, on a blockchain. We're talking about trillions of dollars in real-world assets that could, theoretically, move on to this new system. All right, so why Ethereum? Why is this the one? Well, according to Lee, it's because Ethereum is basically becoming the operating system for this new digital money world. Think of it less like a currency and more like Windows was for PCs back in the day. It's the base layer, the default rail that pretty much everything else is being built on top of: DeFi, NFTs, and even the big tokenization projects that major banks are working on right now. And this is where it gets really interesting, because you have to understand how he sees the two giants of crypto. For Lee, Bitcoin is digital gold. It's a store of value, and he thinks it still has a 10x potential to get over $1 million. Awesome, right? But he sees Ethereum as something totally different. It's the core infrastructure, the platform for the whole shebang, and that's why he gives it that even bigger, 20x potential. They have two completely different jobs in his eyes. Now, I know what you're thinking. A 20x prediction? That sounds kind of nuts, right? Well, this chart just gives you a little historical perspective. Over the last decade, Ethereum's performance has been absolutely wild. The S&P 500 tripled, which is great. Bitcoin did an incredible 112x. But Ethereum, a mind-blowing 500x return. Now, of course, past performance doesn't guarantee future results, but it sure does show you the kind of explosive power this asset has. But here's the thing. Lee's big calls aren't just about crypto. Not at all. He believes these same massive technological shifts are creating some huge, overlooked opportunities in the good old-fashioned stock market. So let's see where he's putting his money. He's zeroing in on two spots in the market that he thinks everyone else is just sleeping on. First, small cap stocks. Smaller companies that are actually growing their earnings but are being totally ignored because all the big money is chasing the giant tech names. And second, financials. Yeah, banks. This is where his argument gets really, really interesting. Okay, so get this. Here's the core idea for why he's so bullish on banks. Traditionally, we see them as kind of boring, right? Labor-intensive, tied to the economy, so they get these low valuation multiples, maybe 15 times earnings. But Lee's argument is that with AI and digital tech, they're not really old-school banks anymore. They're becoming tech companies. And if the market starts pricing them like tech companies, with multiples of 30 or higher, their stock prices could literally double without them even having to make another penny in profit. And look at this. This just lays it all out plain and simple. Check out the current PE ratios for the biggest banks in the US. They're all hanging out in that low to mid-teens range. That is way below the tech sector. This table basically shows you the gap. It shows you just how much room there is for these stocks to run if his thesis plays out. So with all that in mind, here are some of the companies he's actually picking. You can see the strategy here, right? It's a mix. You've got the core AI players like NVIDIA and AMD, but then smack in the middle, you see Goldman Sachs. That's him putting his money where his mouth is on that whole financials as tech idea. It's a portfolio built for what he sees coming next. Okay, so we've talked crypto, we've talked stocks, but all of it, sits on top of one giant foundational idea. This is the bedrock for his entire bullish worldview. And that idea? It's demographics. Seriously. He argues that the big swings in the market aren't random at all. He says you can explain almost every major bull market since 1890 just by looking at the earning and spending cycles of human generations.
And this timeline, wow, it really paints a picture, doesn't it? Major bull market tops have lined up almost perfectly with when a big generation hits its peak earning and spending years. You see the boomers peaking right around the dot-com bubble. Gen X peaked in 2018. But look at the biggest generation of all, the millennials. Their peak isn't projected to hit until 2035.
So what's the takeaway from all this? It's huge. If this pattern holds true, we're not at the end of a bull market. We might be in the middle of it. The biggest demographic wave is still building, providing this powerful structural tailwind for the market that could push things higher for, well, for almost another decade.
All right, let's put all the pieces of the puzzle together now. How does a demographic trend that goes all the way back to 1890 connect to a crazy 20x prediction for Ethereum? Well, it's all part of this layered outlook.
It's like a pyramid, right? It all builds on itself. At the very bottom, the foundation, you have that demographic tailwind pushing everything up until 2035. On top of that, you have undervalued sectors like financials and small caps ready to play catch-up. Then, the next layer is the major disruption coming from digital assets, with Bitcoin as your store of value. And right at the very top of the pyramid, the ultimate play, Ethereum, the infrastructure that this whole new world is going to be built on. So we'll leave you with this question to chew on. Tom Lee has laid out this incredibly compelling case that connects generations to technology to asset prices. And it really forces you to think, if he's right, if demographics really are market destiny, and if technology is completely rebuilding finance from the ground up, where are you going to be looking for the biggest opportunities over the next decade?